Yes, sir. It's your boy B Hayes. We back with another one, guys. So let's go ahead and jump right into it. So this is getting wild. You guys seen exactly what happened in the market today. Man, we shouldn't even have to talk about it. I know you guys seen it with your own eyes. Wild roller coaster ride of a whole October as a whole, because it ain't just today. It's been all month, guys. It been yesterday, the day before yesterday, last week, the beginning of this month, all month long. This has been one of the craziest up and down months that we seen all year, guys. All year it's been, a wild ride. It's been up and down, but overall bearish because we're in the bearish market. But this month has been a roller coaster. I'm talking swings up to the upside 10-15% in a day, large cap companies, and then right back down the same 15% in a day. Things like this doesn't happen. This is not a normal market at all, guys. It's far from it. So let's go ahead and take a look at it, see what the hell has been going on, and see what's going on with everything. So anyways, as we know, guys, we had some major earnings to be posted on this week. We had two out of the gate, two big companies to miss earnings. We had Google and also Microsoft miss earnings by expectations, causing a little reaction to the overall market. But like I told you guys, we is in a place in the market to where earnings, CPI inflation data, a lot of, data is not going to matter. A lot of things is going to be strictly price action, being for the fact that, the market is already being hit very hard. Market makers, they trying to come in and mess up short sellers because it's so easy to short the market, because theoretically that's what it's supposed to be doing. So the market ain't just going to print easy money. So that's why, on top of other reasons, why we're going to have these bullish factors coming in the market here and there. And I told you guys it would happen several times before we actually reverse and go into a bullish market. And that's what we're experiencing now, that bullish market within the bearish market again. We haven't really sustained any of it yet. It's just been happening in a day or two's time, and then right back down. Happen again the next day, then right back down, and it'll end up, and you get what I'm saying. But anyways, let's go ahead and see what's been going on, guys, because it's been getting crazy. And also take a look at AMC and what analysts have been expecting. So as we know, guys, on today, we had Apple report earnings, and we also had our other large cap company was Apple. And if I'm not mistaken, where's my other? 1 second, guys. It was Apple and Amazon. So right here we got Apple. We know Apple beat expectations, guys, by a long shot. Basically, they had expected for Apple to bring in $1.27 per share. It reported $1.29, guys. And they expected revenue was 88.7 billion. It reported 90.1 billion. So we do know Apple did slow up in iPhone sales and services. So it reported good earnings, but Apple came up short versus revenue expectations in core product categories, including the company's iPhone businesses and services. So Apple is doing exceedingly well, guys. They is expecting a slowdown coming very soon in the next quarter. Already trying to, put that out there. But like we know, Apple is way ahead of itself. It's trying to get into insurance, getting into Apple insurance. Also is going to be looking into getting Apple cars. And Apple is, they becoming very competitive. And they got a crazy brand. They is well branded. So I do believe Apple is going to be around, almost like one of those forever companies, guys. Even if phones start to slow down for them, they have so much capital. They are so powerful and so well known. They're able to use that knownness, that use their fame basically and leverage that into another business. So let's go ahead and continue on, guys. Amazon, on the other hand, Amazon, they try to make it look as bad as it's not, guys. It ain't as bad as it look. They say, oh, Amazon missed expectations. It come falling down, what, 20% plus in the after hours? I'm talking about it dropped like a rock, guys. And that's exactly what opportunity presents itself. You already know what I'm doing. I'm loading up. Call options and all. So let's go ahead and take a look at it, guys. So Amazon expected 20 cents per share, reported 28 cents. So earnings per share, they was surprised by 37%, guys. Beat expectations way out of the water. Revenue, they expected 127.4 billion, reported 127.1 billion. Let me read that again. Expected 127.4 billion, reported 127.1 billion by the slightest hair, guys. So it was a surprise and missed by negative 0.2%. So as we know, earnings was not quite bad at all. You know what I mean? And we actually, gained on the earnings per share side. But as we know, the media, they'll try to make it seem as isn't, so something is not. Just try and control the narrative. But anyways, guys, as we know, like I told you guys, regardless of what the earnings come out to be, of course, for the mean in between time, it probably would drop just to get a quick reaction. But overall, it's going to quickly reverse and come back, and the market is going to head right back up, guys. But being for the fact that Apple has solid earnings, great earnings, Amazon, good earnings, even though they miss. I know what the media is saying, but I'm saying, as far as my standpoint, it was good, quite good. So with that being said, guys, this is going to help the overall market throw another little bone at it, basically, because we was already expecting this, regardless of what they was talking about. That's just news, that's just fuss. Regardless of what they was talking about, we was already expecting this. So this is just icing on the cake that these big dogs reported good financial standards. We also had good economy data on today, guys. The economy grew by 2.6% by the GDP report. So that's also a piece of, a little bone to throw at the conclusion of us going into this little mini bullish market within the bearish market, giving us a little icing on the cake to help further, do what we need to do, guys. So as we know, let's go ahead and take a look at this, because, AMC and GME is heating up, guys. Meme stocks is still around. It's still hot. It's still here. And retail investors haven't gone anywhere. As we know, guys, AMC has been struggling to get over that $7 barrier. We cracked it, ran as high as 711 on yesterday, went right back under it, couldn't get over it today. As we all know, we should have got over today, especially whenever our competitors, our peers are running up, doing fairly well. Bed Bath & Beyond, GameStop, they was up in the green, holding their own on today. As a matter of fact, GameStop ended up outperforming its competitors in the market on today. So GameStop had a very good day on today, ended at $26.50, while AMC actually ended in the red, guys. And as we see right here, we got Credit Susie say sell AMC, predict stock headed to 95 cents, guys. So she trying to say AMC is headed to 95 cents. So I do not believe that's going to happen, guys. And if it do happen, it won't be at 95 cents long, because retail investors are going to buy so many call options, and they're going to be far out to make sure they expire in the money. Before they expire, they be in the money, and so many people want to load up thousands of shares that it won't be at 95 cents for long, guys. As we know, any AMC has the advantage of possibly becoming an even bigger breadwinner in this space, being for the fact that a lot of its peers and competitors are running out of cash. They're running out of capital. They're not able to hold and stay afloat like AMC. Once they fall off the map, it'll just be only AMC standing for all the families and everybody to go to one location, on the only dope dealers on the block, or everybody else then got locked up. The feds and did a sweep. So that's exactly what type of case AMC would be in. And we know AMC, it'll be a while before, even if they was to lose everything and go back and up, it'll be a while. They got enough cash to hold them over a few years now, 2 to 3 years. And they even, they have the power to even liquidate assets and get even more capital to hold them off another 2 to 3 years. So in total, AMC can hold off with the cash that they have access to and already have for about 4 to 5 years, guys. So anyways, I don't believe that's true. So as we know, GameStop ending the way it did and running up the way it did, and after hours, guys, is showing great signs of a continuation that is ready to burst. And we know if GameStop continue on its trend, the trend is our friend, and AMC, meme stocks, Bed Bath & Beyond, they all is going to follow along and follow suit, guys. So you already know what to do. Add your boy on Instagram at the B Hayes Show. Get in VIP. We calling out bangers over there. Also, watch out for spam, WhatsApp, and all that. I love you. We out, and God bless you. We go.